Hi everyone, welcome to Hysab Kytab Podcast series. Today we will be discussing mutual funds. So I'm Hassan Veaqr. I look after partnerships and alliances for Hysab Kytab, and with me today is Murtaza Hassan from NIT. So we're of course we're living in a time now where there's a lot of inflation, there's a lot of uncertainty. People are looking to save, they don't know where to put their money, and this is why we are where we are today, and we're looking at mutual funds. So, but why mutual funds? What are mutual funds, and how do they benefit a common man?
Thanks, Hassan. Thanks for having me. Right, mutual funds, like you said, inflation is rampant these days, and people are confused what to do with their money. Especially the younger crowd, like the older people, have kind of invested in traditional avenues like real estate and committees, if you've heard of those. But the younger lot, even if they're young, they're saving their money, they don't really know what to do with their money also. I mean, it's not necessary or so technical also, right? It's a technical job. So the concept of a mutual fund is that you, being an investor, don't have time or the expertise. You give your money to a company, us being a mutual fund, for example, and they manage your money on your behalf. These funds can vary from short-term funds to long-term funds, depending on your objective. I'll kind of go into detail what these different type of funds are, but the basic concept is that you invest for a purpose or a goal, and mutual funds, for a very nominal fee, they manage that money for you. So you basically get that expertise. You don't have to give your time, and that is the basic concept of a mutual fund. So another example is that mutual funds, they pool multiple investors' money and invest it for that same particular goal. Like I said, you can have short-term funds, which could be, say, you have money, say you sold a property or you got a large scale of money and you don't know what to do with it. You have it for a few days or a few weeks. You can put it into a money market fund. It invests in, say, bank deposits and short-term bonds. Why would you do that through a mutual fund company? Banks, say, would give a smaller investor an X rate, but the higher that sum invested in a bank, you get a better rate. So we basically pool multiple investors' money and then go with that negotiating power with the bank. So we get an X rate, which is thoda zyada than the average person would get in a bank. So that is one kind of advantage of a short-term fund. Then again, we have funds like fixed income funds, which are, say, for a little longer-term goal. I'll just go into a bit of detail. Like, say, what mutual money market funds and are kind of invest in sovereign debt issued by the government. But say a company wants to issue some debt, like for a company like Ruabza, Hamdard, they want to issue money. So they would issue a term finance certificate, right? So just by logic, if a company is issuing money and a government is issuing money, you would want more money from the company, right? Because potentially it can go into loss, it can go bankrupt. So instruments issued by companies, we call them term finance certificates. So they kind of give you a better return, but they come at a slightly higher risk. Those are we kind of classify as medium-term instruments. और उसमें then we also have के government के multiple tenures की instruments होते हैं. So in the medium-term funds we have PIBs, which are like Pakistan investment bonds. They can range up to 10 years and even more.
Right.
So usme, I mean, and the logic says the longer the bond, the higher the return. But surprisingly, and that's a bit technical, but I'll just stress on it a bit right now, that in Pakistan currently, the short-term instruments are actually giving you a higher rate than the long-term, because Pakistan's liquidity requirements in the short term are actually more than potentially they would be in the medium term. We won't get into too much detail on that, and then you have equity funds, right? They invest in the stock market, like you said. Those are kind of, you can make, say 20-30% in 1 year, and you can actually potentially have a bad year also.
Yeah.
But
Actually.
our concept is that you invest in the stock market for at least say 3 to 5 years, and there's no way you can lose money. And we also stress that you should invest regularly on a monthly basis, as opposed to making one bullet investment and then forgetting about it. If you invest regularly every month religiously over, I think, anywhere in the world, you can't lose money. So like you said initially, your goal shouldn't be just to beat inflation or even just meet inflation. If you're investing money, your goal should be to outpace inflation. And
Naturally.
sometimes we get a bit cynical in the short to medium term, but even in Pakistan, however our economy has been if you take a 20 to 25 year data, the stock market has beaten inflation by say 8 to 10% per annum over the last 16-20 years. It has been a bit tricky for the last 2-3 years, but like we said, you have if you expect to make money in the stock market in 6 months or a year,
long-term view, right?
It's not the way to do it.
Yeah.
And just on a lighter note, I would just stress that how in Pakistan everyone thinks they're a doctor or they're like an investment guru. They hear stuff on the road and on the street, and they think just do that. But there's a reason. There are people who are qualified to do this
Naturally.
job. So we generally urge whatever you do, if you don't have the time or the expertise, to kind of go towards a qualified investment company as opposed to trying to do it yourself.
So, one thing that we've also seen in the banking sector is there's sort of banks that are Sharia compliant, and then there are banks that are conventional banks. Naturally, in a place like Pakistan, we've seen the rise in Islamic banking, right? So I think similar is the case here. How do you sort of, with mutual funds, you have Sharia compliant funds as well, and then you have non-Sharia compliant funds? Is that how it works as well?
So interesting that you mentioned that. I think last अगर आप 3 to 5 years का data देखोगे, so I think primarily the growth in our industry has been on the Sharia side.
Right.
पहले तो individuals were kind of like the two ways, right, to look at it. One would be like, you're not super investment savvy, but if the return is comparable or % or 2 less, people are like, sure, why not go for the investment? And surprisingly, in the last say few years, even companies were scared about their return. Like if the conventional return was higher, they didn't really have much of a moral kind of compass. But lately, we've noticed a lot of companies have also now shown the interest to invest only in Sharia compliant products. So in the last say 5 years or so, पहले शायद money market जो we just discussed Islamic का होता ही नहीं था, but now nearly every mutual fund company out there has a Islamic Sharia compliant product, and income fund which are fixed income products, and then obviously equity products तो थे पहले भी, but the recent blossoming of the shorter term products, उसमें Sharia products have probably grown faster than the conventional products. And the return is, there's not much difference. So
naturally, we've seen sort of that in the stock market in itself, that you have that Sharia compliant stocks have outdone the stocks that are more on the conventional basis as well. So I think we already touched upon more of the mutual fund sort of landscape. But in terms of the people investing today, where are we at right now?
Right. So honestly speaking, our saving rate just generally in Pakistan is one of the lowest in the region. And just generally speaking, for mutual funds, even banking, if you look at our banking, it might seem like it's very robust, but our penetration is still very negligible. If you look at the whole economy as a whole. So if you look at mutual funds, obviously if you want to invest in a mutual fund, you need to have a bank account. You can't invest in a mutual fund without a bank account. So that is obviously even lower. I think actively we have less than 1 million investors in Pakistan, and substantially lower than that. And if you look at our population, that's less than probably 1%.
Yeah, I think that's it's an interesting point, because I think there's sort of a positive to it as well, because majority of our population right now is young,
Yeah.
right? And they're up and coming and they're coming into the workplace, etc. And some of them are transitioning into sort of colleges and now going to be coming into the workplace. So I think one thing that we've already seen an initiative from State Bank, which is the digital onboarding initiative, and that should help bank more people, right? We're also seeing an influx of new applications such as SadaPay, NayaPay, and other wallets that are already out there as well that are working on banking more people. Would you say that that would help bridge the gap, or there is one more layer where there's sort of, there's consumer or sort of an average person does not really understand right now how mutual fund works, like.
No, so definitely all these initiatives in the last, say, year or two have made the environment more conducive to invest. And I think one misconception that I like to clarify on your platform is that you need a lot of money to invest. The concept of mutual funds globally generally is that with a very nominal, low amount of money, you can invest your money. Like, just to explain, if you want to, say, open a brokerage account in Pakistan, or realistically invest in the stock market, I think you would need at least a few 100,000 rupees. Otherwise, you would not really be able to buy too many things. So that's where a mutual fund kind of steps in, where it's made for investors who don't have that much money, don't have that much time, and we don't have any minimum investment amount. You can invest as low as 5,000 rupees because you're basically investing in a fund which is kind of its own entity. So there are investors, say, with 5,000 rupees in that, with 100,000 rupees, a few million, up to billions of rupees. Like, we have companies that have a few billion in one particular fund. So the beauty of a mutual fund is that everybody kind of collects together and invest in a pool of assets, and everybody gets a portion of that return depending on their weightage. But me investing 10 rupees and you be investing 100 rupees, I get the same return that an investor with 100 rupees gets. So I would just like to clarify that you can invest with as low as 5,000 rupees.
Yeah, because I think there is this, you can call it a preconceived notion, right? People hear the word mutual fund and they hear something extremely complicated that requires, as you said, it's capital intensive as well, which you sort of clarified is not the case, right? But then the question becomes that where is the gap, and what exactly is the missing piece, right? I mean, one part we're already looking at, that we have the digital onboarding coming in terms of people getting banked, right? And I think the second part might be awareness. How can we sort of build more awareness around that? What is the industry, the mutual fund industry, doing to create more awareness around this? Because it's a very common question that you hear these days, that if I have money, where do I put it today, right? It's a quite simple question, but people are not getting the answer to it.
Yeah. So look, the mutual fund industry, generally speaking, in Pakistan isn't too old also. If you look at it, it's probably 2 decades old, most companies. One old company, a government-backed company called NIT, National Investment Trust, has been there in the 60s. And I think it's generally been synonymous for investments. If you ask a couple of generations before, they probably knew what NIT was probably on your tips. But the younger generation, sadly, if you ask them, maybe 5 out of 10 people about a mutual fund company, they might not know of it. Because most of them are like arms of the banks, so they probably heard of the banks. But generally speaking, mutual funds are not the done thing. But like you said, these initiatives that have been taken in the last, say, couple of years, last 2-3 years, they're definitely seen an influx. So we've seen some new investors come into the market, but there's still, like you said, there's a lot of opportunity for us being.
No, naturally.
And again, I keep stressing that point there. People should save whatever it is. Like, even if you if just the power of compounding is amazing. Like, the younger you start, the years that you have on your side makes a huge difference. Like, if anyone's interested, if you invested, say, 5,000 rupees for 10 years and you invested 5,000 rupees for 20 years, that same amount of 5,000 monthly will multiply multiple X every additional year that it's been invested.
Right.
So I would just generally, I mean, over here, in Pakistan, people are generally, until I think the mid-20s maybe, people don't even think about saving. But I think even like university kids, I mean, these days, if you go out for like an average or like a half decent meal, you probably spend about 2,000 rupees.
Yeah.
Or even like a basic meal is 500 rupees.
Right.
If nothing, I would say you start off with 1,000 or 2,000 rupees a month. That is something I think anyone can start off with. And just get into the habit of saving at least. And then once you have more substantial money, then you can invest regularly. But you learn the ins and outs at a young age, I think will definitely help you going forward. And just the concept of having that discipline that you need to save X before you spend. So the golden rule is, if you're earning a salary or you have some stream of income, whenever that comes, take 10% on the minimum. If you can do more, put that aside, and then use the remainder as your spending money.
Yeah.
You don't think that you cut that out, you put it, and you just forget about it.
I think something that comes to my mind is, I mean, most companies offer a provident fund, right?
Yeah.
And is there something that you can do with a provident fund, with, you know, a mutual fund? Because that provident fund is, of course, in itself is something that, you know, you're sort of looking forward to get once you are away from the company, right? But how can that fund sort of or be accelerated with the help of a mutual fund, or is that even an option?
Okay, right. So I'll just stress on a couple of things. So mutual fund companies, most of them have licenses for a pension fund as well. We kind of, in our industry, we call it the voluntary pension scheme. So I think it's evident from its name that in Pakistan, generally speaking, maybe a few older companies offer pensions to their employees, but the younger, newer companies don't offer this service. So really speaking, after retirement, you don't really have something on default. You need to kind of save for it. So most companies offer a provident fund.
Right.
So there are 2-3 aspects where we kind of can, I think, add value. Say I'm a 50-year-old man, you're a younger, just stepped into the workforce. I mean, if you think about it, you would want your money to be, you have much longer till retirement, so you can generally afford to take more risk. Me being closer to retirement, it's natural that I would want to take less risk. But generally speaking, a provident fund, how it's managed in a company is it's kind of managed in a universal way. Usually the standard is 20-30% in equities, if that, and the remainder is in a fixed income product in a investment savvy company. But most places just put their money in a bank account, for example, and that's what the return is. So what you can do is that you can go to your company and say, I want to withdraw this money from my provident fund and I want to invest it in a voluntary pension scheme, which is certified by our finance ministry. And so basically you take your individual balance and you transfer that into a mutual fund company. So it could be, say, accumulate, if you've been working for, say, 1 or 2 years, that accumulated balance will get transferred. And subsequently, whatever monthly contribution, yours, plus what the company kind of matches, will then be transferred on a monthly basis to a particular pension company. So that way you can kind of manage. So in the pensions fund, we basically have few allocations that you can do, equity, debt, and money market. So you can set that allocation.
It's the same set of sort of things that you're sort of investing in.
So logic could kind of say that you being the younger person, you would, and because you're contributing monthly, like I stressed earlier, I think going into equities is a no-brainer for you, because you're not going to be looking at it on a daily basis. You're going to be looking at it on a 3, 5, 10-year basis. So in that kind of horizon, it's, in my opinion, a no-brainer, but you should go into equities. But it's similarly, I did something like that. I would maybe be a bit more conservative. I would still maybe put a bit of money in equity, but maybe 50-60% would be in fixed income, because I also have this accumulated balance, which has been accumulating for X amount of years. So I'm taking risk on that as well. But just the concept is that you basically, on an individual level, control your allocation and how your provident fund is managed. And I mean, most multinational and generally companies looking out for their employees kind of push their employees to do it. I don't know in your kind of population that's listening to this, if they're kind of aware of this or not. And then दूसरा the option is कि इसमें Islamic option भी है, because a lot of अब नए जो the younger crowd, even a lot of people in the younger generation, वो कहते हैं कि we don't want कि हमारे पैसे में interest accumulate हो. तो आप फिर you can, उसका one of the main advantages we've been seeing a lot of people coming in is कि उसमें आपको Islamic आपका provident fund Islamic हो जाता है, and आप control कर सकते हो कि आपको कौन से चीज़ में डालना है. And I think the best way to go about this is कि कोई भी mutual fund company को आप contact करें, उनके financial advisors होते हैं. They basically run you through the multiple options and processes. हम तो चीज़ें एक general level पे discuss कर सकते हैं, but I think हर individual का अलग needs होती हैं. Like yours needs are different. I'm at a different stage of life. मेरी needs अलग हो सकती है. Also, 250-year-olds can have completely different needs. Like
no, naturally, I think that
like for example, like my uncle, both his kids are studying in college, like, and he needs sizable inflows from the company in wherever he's invested money, because उनको आगे बाहर पैसे डालने होते हैं. But someone जिनका cycle खत्म हो गया है, he can probably invest money. So that I think you need to tailor according to your needs. And I think जो आप पूछ रहे थे mutual fund companies, we are trying के अब as opposed to just selling our products, we have training our distribution network कि वो advise करें अपने clients को कि what they should do. So it's not कि आपने एक product ले लिया, you kind of create a portfolio. Okay,
so it's more like a partnership with whomever you're working with, right? So you want to be more on the advisor level of things.
No, 100%. अगर आपके पास 100 रुपए हैं, you would say X portion you put liquid, which you आप अगर कोई short term need आ जाती है आप उसके लिए करो, कुछ medium term के लिए आप कोई electronic gadget या एक car के लिए save करो उसके लिए, and then if you want to build a house or you're saving for your kids education, वो long term है. तो अगर आपने तो सारे पैसे risk asset में डाल दिए and you need some money, you can pull your money out. There's no like in mutual funds there are no penalties of early withdrawal or anything, but that investment could be in that downward cycle जो potentially अभी हो रहा है कि आप अगर निकालो आपको loss में निकालने पड़े या they're not as profitable. So you kind of make a mix of your money and make a portfolio. So if there's some emergency, you can pull out maybe that shorter term portion.
And I think the one last thing I want to sort of touch upon is taxation, right? How does taxation work with mutual funds?
Okay, right. So until recently, until the last financial, you actually even got a tax rebate on your investments in mutual funds. But that is actually withdrawn by the government this year because for various reasons. I don't think I'm going to stress on that. But they were there for the last 10, 15 years. So on your income tax, professionals would get a tax rebate by investing. वो तो अब खत्म हो गया. But on the pension schemes, you still have that rebate. So if you, and sorry, I'm not going to get too bit technical, but एक तो आपने provident fund पे जो आपने investment किया into pension schemes, for those you're not eligible for tax rebates, but you can invest your own money, like which is separate from provident funds. On that particular transaction, you're eligible for a tax rebate. But the main kicker right now is, generally speaking, our fixed income products are generally, like I said, they're the main product which is kind of being looked after by our investors these days. So abhi ye hai कि especially for high net worth individuals who have money in, say, banks or in bonds, if your annual profit is 5 million rupees. If you look at the interest rate scenario now, that is roughly between 30 to 35 million rupees. If you're in that threshold, you would pay your income tax on your bank deposit. So potentially, say that's 25% or 27%. If you break that 5 million per annum threshold, you would pay that much tax on your income. But in a mutual fund, we basically pay dividends and pay capital gain tax on our different transaction, depending if you get a dividend, that's a dividend tax, or if you encash your money, it's a capital gain tax. Those are as low as 15%. So if you kind of in that range of say 30 million to 35 million or more, you have significant tax advantages investing in a mutual fund. So I would definitely urge your audience, whoever kind of falls in that category, maybe contact an advisor of a mutual fund company, and maybe they can guide you better on those tax advantages. Because
No, I think definitely it makes sense. I've honestly learned a lot from this conversation, but I think it makes so much sense for young people, especially to sort of invest in this mutual fund. And I think the biggest thing is one, you're sort of not, hopefully we can beat inflation, but but the bigger thing is that you don't really need a lot of money to enter into it, right? I think that's something that's very, very substantial. But thank you for being here. Pleasure to host you.